The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Indeed, joining us now to discuss the crypto markets is Bob Iaccino. He is co-founder and chief market strategist at Path Trading Partners. Good morning, Bob.
Good morning, Lawrence. How are you?
Good. Glad you're on today. So, as I said, the jobs numbers came in and they were kind of on the nose when it came to estimates. And the unemployment rate was slightly higher than expected, but nonetheless, we're at a stage right now where we have more people working now than they did pre-pandemic. So, what's your take? What's your big take here on this particular jobs report? Anything that changes your mind about where things are headed, and where are they headed, in fact?
So interestingly enough, I wouldn't say it changes my mind. Again, as a strategist, I'm not an economist. So my view of the why of things is much more related to the what. In other words, what's going to happen based off of what just happened, as opposed to whether the number looks good or bad. From a perspective of this particular jobs number, obviously, Lawrence, we're looking at how the Fed may or may not change their reaction function based off of this number. Wages, I think, was the key part. It was the key part I was looking at. Wages actually rose again month over month, year over year. They're unchanged. But it was actually a little bit lower than expected on the wage growth and a little bit lower than last month. That's decent. You don't want to see wages spiral out of control because they contribute to a part of inflation that's sticky, a part that nobody can really do anything about it. I mean, you don't go into a job, get a raise, and then the economy slows down and your boss comes in and goes, hey, you remember that raise I gave you? We're going to pull back on that a little bit, because prices have come down. You don't really need it. That doesn't happen. So wage inflation tends to stick. So you don't want to see that get too out of control. You want to see it continue to grind higher so that your average consumer can actually afford the inflation that is also sticky, whether it be healthcare inflation or services inflation. But then also you mentioned that unemployment rate going from 3.5 to 3.7. That's not actually bad news given what happened to the labor force participation rate. The labor force participation rate actually went up. That means a segment of the population that as of last month had given up on finding work is out there looking for it. So they've added to what the BLS counts as the labor force. That's actually good news. So when you see this go up, if you saw unemployment rate go up and you saw labor force participation either stay flat or worse yet, go down, then it's bad news. But right now, that's not bad news. So overall, a very solid number. We're seeing the probability of a 75 basis point rate hike by the Fed. It was at 74% yesterday. It's at 70% this morning. Dropped to 68% right after the number, 62% as I speak to you right now. So it's a little bit easier for markets and for crypto as well.
Yeah, so let's bring it into crypto here, because how does the crypto market play this? What's the overall thinking? I mean, I'm of the school, and I'm going to reveal my bias. So all you people who think that the media is biased, indeed I am. My bias is that the macroeconomic factors don't have nearly as much of an effect on the price of things like Bitcoin and ETH the way people think they do. That it's actually really hard to ascribe price movements in Bitcoin to those macro factors. So, I mean, do you believe that as well, and if not, how does these kinds of numbers that are coming out now and what we're seeing in the labor force affect crypto?
Well, I'm going to reveal all three of my crypto-based biases to you here. Number one, I'm a long-term believer. Number two, I'm a medium-term believer. Number three, I'm a short-term skeptic. And what I mean by that is when you have something like crypto, which is still reliant upon those people who are not convinced yet becoming convinced, you need two things. You need them to have extra wealth that they don't mind risking on something that they see as risky long-term, like crypto in general. Number two, you need them to have jobs that are reliable so that their wealth stays consistent. So with this particular set of numbers, you want to watch a reaction to the dollar and the reaction to yields. We saw the dollar fall right after the number. We saw Bitcoin rise. We saw yields fall right after the number. Subsequently, again, Bitcoin rose. When people have limited investing capital, which is what has happened since this bear market in equities began, they sell things, okay? They sell things. They don't want to sell stocks, which I've never been a fan of. I've been pretty much a fan of getting out of stocks when the price action tells you to. That's what a strategist does. But a lot of people don't want to sell their stocks. I know people personally, and I'm sure you guys as well do as well, that bought stocks saying, oh, I'll get out if it goes $10 higher. And the minute it goes $10 lower, they go, oh, well, that's a long-term investment anyway. People don't necessarily do that at this stage. I'm talking about the general investing public with crypto. So from that perspective, you want them to have disposable, investable capital so they can come back into the market that the three of us all believe long-term is going to have value, if not ultimate value.
Wow.
All right. Well, we are seeing a bit of a bounce with the crypto markets, with Bitcoin, more so with ETH and DeFi. I wonder, with the upcoming merge in September, what your thoughts are on Ethereum and the like.
I actually own more Ethereum than Bitcoin right now, believe it or not. I sold out of all crypto in March, literally everything that I had. And I started nibbling back at Ethereum more so than Bitcoin, more because it's a use case situation than Bitcoin is. Now, if we're going to go into which is actually the better blockchain technology and more functional, it's going to be above my pay grade. I'm a traditional investor that believes that decentralization is the future, and I want to be involved even prior to me fully understanding it. But Ethereum seemed to me to not have sort of the, I don't know, the negative characterization out in the traditional investing world, which again is where I'm from, that Bitcoin did. So starting to nibble back into crypto in sort of a buy and hold type of perspective, I've done that more in Ethereum than Bitcoin.
Any other coins you're looking at other than those two guys?
No, I really do stick to just those two. Again, it's above my pay grade to understand. Number one, I don't understand when a new coin or let's call them tokens, a new token comes out and has a use case. It's above my pay grade as to whether that use case is going to take hold or not. So I have owned Doge in the past. I own quite a bit of Doge. Again, sold all of that. And my initial reaction would be to get into the larger coins first, get some income out of that, get some earnings, see some value created, and then kind of take some of those earnings and go into some of the less well-known coins. That'd be something I'd be looking to do in the future.
Any interesting trends you're seeing in terms of volumes, institutional interest, technical indicators?
Yeah, from a technical perspective, I think Bitcoin is temporarily broken out. I see 26,000 in the very short term. From that perspective, again, that's why I'm involved from the long side right now in Ethereum and a little bit less with Bitcoin, is I've seen technical breakouts in both. But again, if we don't get a recovery in the NASDAQ, I'd like to see that correlation come back to where it was, simply because it helps it's kind of like talking my book there, right? It helps my base case. So from that perspective, I like it. The other thing, I always want my trades to go higher, right? But from that perspective,
people like talking their books usually. That's
at least be honest about why you're doing. I don't want to sit there and say, I think this stuff is great. By the way, I own it, wink, wink. I actually do own it. So of course I want to see it go higher. And of course I believe in it, otherwise I wouldn't be in it. But from that perspective, I also want to see the regulators make up their minds and get out of the way. Because I think Bitcoin and Ethereum specifically are going to be two asset classes that, very similar to American business, stop changing the rules. Once we know what the rules are, the assets will adjust to those rules and will survive. So I'd really like to see them get out of the way with that. And I'd like to see, I don't really want to go into that. Never mind.
Go into it. Come on. We're family.
Wait, now we have to know.
Well, a lot of the stable
don't do
coins,
that.
The stable coins bother me. Okay, especially Tether. Tether bothers me, and I don't want to.
You and Lawrence have something in common now.
Well, you've come to the right place.
I don't want to see a Fed stable coin be the dollar-denominated coin, but I want to be able to believe the assets behind the stable coins. So from that perspective, I'd love to see them kind of clear out. People get out of that asset. I think that's one of those assets. My entire investing life is about risk versus reward. And one thing I always try to explain to people is we make risk reward decisions every day. You decide to cross that 4-lane street against the light. There's obviously a hot coffee that you desperately need on the other side of the street. Otherwise, you wouldn't do something so stupid. That's a risk reward decision. And from my perspective, Tether brings a lot more risk to the overall crypto story than we need to have right now, especially as people are struggling with the idea of adoption. So from that perspective, I'd like to see the stable coins kind of get the hell out of the way, if I could speak frankly.